In today's video, I'm gonna show you the exact strategy that made me well over 6 figures, so that's it, let's just get into it. But just before we get into actual chart, I want to show you the proofs. Of course, you can see in front of me the live tracker, the Tradezella. You can see all the profits, all the trades I took in the last 2 months, and basically it's all there, you can check it out. And the second thing, if you want to see the every trade I took basically in depth in the market, so me explaining everything about every single trade I took live, you can hop to this channel and you can see all the losses and all the wins. So yeah, with all that being said, let's just get to the chart. So just before we get into any examples, I want to actually show you what we are going to look on the charts and what confluences we need to know about. So the first confluence we need to know in the market is fair value gap. It's very simple, everybody knows about it, but if you don't, fair value gap is just basically, if you look at a market, you can see the gap between the first and the third candle swing. So basically this hole right here in the market is called fair value gap. And why is fair value gap very important to us? Because fair value gaps can basically tell us two different stories. So market can respect the fair value gaps and market can disrespect the fair value gaps. And this is going to be very crucial because the fair value gaps are alone going to tell us basically where the market is headed. So we are never going to not have a clear bias because we are just going to look at how market is respecting and disrespecting fair value gaps. So it's going to be pretty simple. And now we can go on to the second confluence, which is called liquidity. But just before we go to the actual liquidity, I want to tell you that this strategy you can either swing trade it and you can scalp trade it. So in the examples later, I'm basically going to show you how you can do whichever one you want. So what is liquidity? So basically let's take a look at this. We have some kind of basic market structure. So market is, let's say, just uptrending to the upside, and it is just creating normal pushes to the upside and normal rebalances to the downside. And right now, what is liquidity here? How do we know what is liquidity? So first we need to understand the logic of the market. If the market is moving to the upside like this, and you can see that it's basically creating these kind of pushes and then retraces, we need to understand why does market need to do these kind of retraces. Why cannot it just push? And that's because of liquidity. So basically when we see market pushing to the upside like this, what happens? As market is going higher and higher, market starts to lose that opposite kind of buyers or sellers. So if the market is going to the upside, a lot of people are buying into the market, but not anybody is going to be here to sell the market to the downside. So what does market need to do? Market needs to basically rebalance. And after it rebalances enough, there can step in enough buyers right here in the market and they can take control of the market to the upside again. And right now, what does liquidity even mean here? So basically if we are pushing to the upside like this, at one point there's going to be not enough buyers to keep the market above this level right here, and below this level of course is going to be a ton of stop losses of all the people basically following the trend to the upside. And what is market going to do? Market is going to come down here because sellers are strong enough. They're going to break this low, but that's not going to be a break of structure. There's just going to be a basic manipulation, and from this point on enough buyers are going to take over the market and just continue the trend to the upside. And this is what is called liquidity. And basically liquidity is on every single high and on every single low in the market. And this is going to be very important for us because we want to see these kind of manipulations before we enter the trade. So if you want to trade to the upside, we are always going to look for some kind of manipulation to the downside first, then we are going to look to trade to the upside. Okay, so let's go right now to the actual examples I told you about, and let's go over all the wins and all the losses I shown here. Alright, so let's go over the first trade. So if I replay the market, let's say right here, what can we see? We can basically see market just pushing to the upside like this and basically creating structure. But what can we also see is that we left some kind of liquidity right here. So you can see that market basically did this, pull back, and then did another push to the upside. So we left a nice level of liquidity right here. And then if you look to the left, we can see that right here we actually do have a fair value gap. So we have a little fair value gap right here, and then we have a huge one just below it right here. So what are we going to basically wait for? We are going to wait for market to come to the downside, sweep this liquidity, tap into these fair value gaps either like this or into the second one like this, and basically then I'm going to show you how to even enter the market. So let's see what the market is going to do. So market just tapped into the first liquidity and it's going to the upside. So now how do we actually enter the market? And I want to say that this is on the hourly time frame. This is for the swing trading. In the second example, I'm going to show you how you can basically scalp this strategy. So as you can see, we have these fair value gaps right here. So if you mark out, we have this fair value gap right here, and then we have one more fair value gap just above it. And trust me, this is going to be so simple. So basically we respected, that's why I was talking about the respects and disrespects of the fair value gap. So we respected from this fair value gap down here, and basically right now what we need to see is the disrespect of either this one fair value gap or the both fair value gaps, but I'm gonna show you basically how you can know which one do you need to see. So you can see market right now just wicked above. What we actually want to see is a close above the fair value gap. So let's see what happened. So we are still wicking right there. So right now we closed above the fair value gap. So what can we do? We can even enter the market right here. So we can do this and we can enter the market, and what I like to do is either I like to target 1-to-1 or some kind of liquidity. For swing trading, me personally, I like to only target 1-to-1, and for scalp trading I like to usually target some kind of logical liquidity that is not too far away. So basically this can be the first entry right here. So let's see what happens. So basically market right now tapped into this fair value gap, came very close to the TP right there, but let's see how do we get the second entry, which is gonna basically be off of this fair value gap right here. So market is right now just creating some noise, and there it is. Actually we just closed above this one, so we actually got two entries right here. So let's see how are they gonna play out basically, and let's see what is gonna happen. And in the end they both won. So imagine if you were like targeting this liquidity right here, that would be great risk to reward on these two trades, but trust me, 1-to-1 is more than enough with almost 90% win rate. So let's basically go to the second trade right here. So let's see what happened right here. So market is pushing to the upside. You can see that we also created some kind of these lows that we are just sweeping. So let's see what is happening. So what happened right now is we only swept liquidity, but if you look to the left, you can see where the fair value gap is. So if the market is to right now give us the entry to the upside, this would not be A plus picture perfect setup, but this would be B setup, because we have only one confluence right here, which is liquidity. So we can sometimes have only liquidity or only fair value gap delivery, but when we have both at the same time, that is just going to be the best possibility. Okay, so let's see what is going to happen. So we just closed above, there would be the entry, and you can just see us quickly playing to the take profit. But let me show you right now how you can basically scalp this strategy. So once the sweeps happen and once we have the confluences, for this example this would be the B setup because we only had the sweep, but if we then enter the lower time frame like this one, like let's say 5 minutes, you can basically see the same thing. So after the sweep right here, you can see for example on the 5 minute we just started going down, and basically this was the first fair value gap that we created, but you can see very well that it was not inversed to the upside. We never closed above it. Then the second fair value gap happened right here, and if you were to enter off of this fair value gap, if we were to enter when we closed above it, we can put our stop loss either below the low or below this low, because you cannot do this would just be way too tight. So you always put it, give it some space like this, and basically look at what happened. If you were to target, I don't know, this some kind of logical target to the upside, you can just see how many risk rewards you will get on this trade. So you can always refine from the higher time frame to the lower time frame, and of course you can do this on the 1, 2 and 3 minute time frames also. So right now I'm going to show you a very interesting thing that happened actually right here. But before I do that, if you like the video, you can leave a like and subscribe. It's totally free, but it's just gonna let you know when I upload the newest video. So look at this. For example, we made a push to the upside right here like this, and then we made a little pullback, then we made another push, then another pullback and another push. So what do we have here? We have a ton of liquidity down here, and we have some kind of fair value gaps right here. But look at what market did. So market started dumping, basically swept all of this liquidity. So right now we swept even this liquidity. We already did sweep this liquidity, so we have a ton of liquidity swept. But look at what happened right now. Basically market left us a entry fair value gap right here, so you can see this gap right here. But if we look to the left, we have only this little fair value gap right here, which actually did respect. But if sometimes on the hourly time frame market looks this choppy, you can enter actually the 4-hour time frame, and you can see on the 4-hour time frame you can see all the big fair value gaps. So we have this one right here, and we also have this huge one down down here. So you can also use the fair value gaps from another time frames like this, and now you can see that we have loads more fair value gaps that we can react from. So let's see what is going to happen right here. So we actually tapped into the 4-hour fair value gap, and you can see what happened right now. We actually closed above it, and let's see what happened. Quick little 1-to-1, and there it is, we are out of the trade and we just took our profit. So let's go to the next example. Okay, so let's see what happened in this example right here. So basically where the market is right now. So we can see that the only thing we have right now in the market is this fair value gap right here. So basically there is no liquidity right here in the market. We just have a simple fair value gap. So let's see what is market basically gonna do. So market came to the downside, it retested that fair value gap, and we left a new fair value gap right here. It is a smaller one, but it's still here. So if the market gives us entry right now, what would it mean? It would mean that it is a B setup and not a A plus setup, and B setups have about 60 to 70% win rate, because A setup have as much as 90% win rate. So let's see if this trade is gonna play out, because this is the second B setup that we had today, and you can see that it almost stopped us out right there. So let's see what is gonna happen, and you can see it failing in the end, because B setups are not gonna be as close to reliable as A setups, but you can of course still execute them because they are gonna be profitable over a long period of time. And then for example, if you look at this setup that is going to present right now in the market, so we have fair value gap right here, and then if you look to the left, we only have liquidity. So you can see that we only swept this liquidity, but there is no fair value gap in the market right here. There is nothing, and you can see that for example this B setup, which is third B setup of today, you can see that it's gonna win very beautifully right here. So basically that's the point of B setups, is if you're gonna execute them all, you're always gonna be profitable over the longer period of time, but with an A setup you're always gonna be profitable with them. But just before you exit the video, I want to give you something actually for completely free, and it is going to be my complete playbook of the whole strategy. All you have to do is go down there to the description and just claim it for completely free, of course. And if you like the video, of course you can leave a like and you can subscribe to the channel, because then you're never gonna miss any new videos that I upload. And also I do accept few more people into my mentorship, so you can also check out that down there to see basically if you're a right fit for it. And yeah, with all of that being said, I'm gonna see you guys in the next video. Peace.